When it comes to investing, one of the biggest challenges that we face as individuals is the ability to stay committed when the journey gets tough. Well, investing isn't any different. If you're investing and you know that your goal is to stick to it long term, then you have to be able to stay committed when the journey gets, again, tough. As we know, the stock market has been on a downtrend over the course of months, and a lot of people have decided to abandon the ship or the plan. And the reason why they do this isn't because they want to do something else that will benefit them. Majority of the time, a lot of people hold on to their money and they want to wait for the stock market to pick back up again. As we know, they've been talking about this recession for the past, since the beginning of this year, even since last year, that we're going to hit a recession. And if that is the case, why are we abandoning the ship? The goal here is a recession generally doesn't happen like COVID, unfortunately. If you remember when the pandemic happened and when the stock market tanked, it dropped more than 20% in 2020. It dropped drastically and a lot of people, of course, panicked. But in a season like this, the stock market has been going down gradually and there hasn't been any drastic drop. The reason why a lot of people abandon the ship is because they keep thinking, well, if it keeps dropping, then of course it should continue to go that way. When in reality, these are the opportunities to buy. For every opportunity in the market, you have to keep your eyes open for the timing. Now, you're not going to time the market because, like I say, you can't always time the market. But if your plan is to invest long term, then these are the times to keep buying. And in fact, these are the times to ramp up your buying power, if possible. Of course, you have to be careful because you don't want to take from the investments or take money that you need, or maybe your emergency fund, and invest it, hoping that it's going to turn around and give you better returns. That's not what you want to do. The goal is to be able to hold on and keep buying the good things, the good stocks, or just buy the ETFs or buy the index funds. So that way your money keeps working for you. Now, I understand the concern. I get it. I am concerned too. But hey, when you look at your time horizon, when you look at your income, and you look at what you're putting into your investment, is it something that helps you achieve your long-term goal? If that is the case, then don't worry about what is going on. Just tune out the noise. And honestly, that's what it is. Because 5 years from now, 10 years from now, all of this will be a blip in the grand scheme of the market. So this is the SPY or SPY, which tracks the 500 companies on the S&P 500. As we see right now, the current price is around 427 at the time of this recording. If I go back to 3 months, it was about 427 actually. If I go back, it was 435 about 3 months ago. If I go back, let's say a year, as you can see what is happening, right? As you zoom out to have a bigger perspective of what is going on, you quickly realize that the day-to-day trends or the day-to-day performance of this stock market, of this ETF, for example, isn't what you should be concerned about. Your concern should be to dollar cost average on a regular basis and tune out the noise, like I said. If we go out 5 years, this was 2020. Like I said, it went from about $332 and it dropped all the way down to around about 228. So you can see all the way from about more than $117 or so. And you can see where it is right now. It's not even close to where it was back then, even before the drop. And this is where you need to have that bigger perspective and look at your time horizon. Times like this are the times we are being tested. Do not fall for it. Understand that your ability to accumulate wealth has to do with some form of risk tolerance and understanding that, hey, as long as I'm not putting my money into risky investments, my performance over time will be good. As long as you put your money into index funds and good, solid companies, your performance will be positive over the long term. I appreciate you leaving your comments in the comment section below, leaving that like, it goes a long way, all that good stuff. I hope you guys have found value in it, and I'll see you in the next one.